So for an overview of the Paycheck Protection Program, all small businesses, including Schedule C sole proprietors, are eligible for this program. It is a loan, starts out as a loan for 2.5 months of payroll self-employed income based on your 2019 activity. So with that, the loans are given by local banks and lenders in conjunction with the SBA. You have to make your request for your loan by June 30th, or when the funds run out, they'll stop giving the loans, obviously. There's currently about $120 billion left to give. They've given out $510 billion. So I would assume with the changes we're going to be talking about, that the remaining $120 billion is going to go pretty quickly, but we'll just have to see. Amounts of the loan not forgiven will be turned into a loan that matures over 2 or 5 years with the new changes from this week. It's a 1% loan with payments deferred at least 6 months. And then the only downfall, as I see it, there's some programs that you cannot participate in, such as the Employee Retention Credit program. So if it's kind of an either or choice that you need to make. So here's just a quick example of what the either or choice I was talking about. We have a client here who this was their 2019 payroll. They're eligible for a loan of $34,271. So that is money that they can get used on payroll and non-payroll costs. And if they use all $34,000 for those things, then it's completely forgiven and they don't have to pay it back. The other option they have is if they were one of the industries that were hard hit. So if they had a reduction in sales of at least 50% in a quarter, or their business was shut down, then they are eligible for a 50% payroll credit equal to 50%. So in this example, if I have a restaurant client who in 2019 paid out $42,000 of payroll, and they continued to pay their employees payroll, and they were shut down for COVID, then they would be eligible for a $21,000 employee retention credit if they didn't take the PPP loan. So most of the time, what I've seen is my restaurant clients, their payroll has decreased. It's probably half of that number. But there are some options out there. And, some of these harder hit business entities, such as restaurants, retail, the amusement parks, and so on, they could have a 50% reduction in sales second, third, and fourth quarter. So they could potentially get a credit throughout the rest of the year as a retention credit. We've had a few that the retention credit's a better option, but definitely the PPP is a known thing that you can get. So we've had most of our clients go for the PPP loan. For self-employed individuals, I wanted to make sure and go over this because I was just this morning, asked this question one more time. Yes, self-employed individuals are eligible for the PPP loan. What they say to use for the calculation if you have no employees is your Schedule C, 2019 Schedule C, and if you don't have your 2019 Schedule C done, you can do a draft. And it's based off of line 31 of the Schedule C. So if this number here is $12,000, $1,000 a month, what you've made, you're eligible for 2.5 months worth of this line 31. So you'd be eligible for a PPP loan of $2,500. 12,000 divided by 12 times 2.5. So as you can see, everyone, all businesses are eligible for it, including those self-employed individuals. For those that receive the loan, you're eligible for forgiveness of the loan proceeds if you've done the following. You must use the funds over 8 weeks, or with this House resolution, we'll talk about it's being extended to 24 weeks. That includes payroll costs and non-payroll costs. You have to fill out a forgiveness application after the forgiveness period ends. And you must have documentation for your payroll, leases, and expenses paid, receipts, canceled checks, etc. So you'll have to have those things documented in a file that if the bank would ask, you know, you can give them the bank. There's a loan forgiveness application that came out in mid-May. It's an 11-page application. It's a special document that is kind of has instructions, a page to fill out, some more instructions, another page to fill out. So it's pretty interesting to try to get around in, but it provided a lot of information about kind of what it is that the SBA and the banks are going to be expecting for forgiveness. And there's a link to that application. One thing I can say, the application will be updated when the new law that I'm going to go over here in just a second is signed, because there's going to be a lot on this that changes. The good thing about this is that then you can see at least what the SBA is thinking about with what forgiveness looks like. So this law I'm talking about, this Paycheck Protection Program Flexibility Act, House Resolution 7010, passed the House in a bipartisan vote on May 28th. It passed 417 to 1, so everyone was behind this House resolution. They also sent it over to the Senate, and the Senate has essentially passed the bill on Wednesday evening around 7 o'clock with no changes. So my understanding is the president should be signing the House Resolution 7010 very soon. That doesn't have a date exactly. It could be today. I would assume it will be by early next week. And we're going to go over those changes in these upcoming slides. I'll point the changes out. Here is a copy or a link to the bill. Something I think that's interesting about it. You know, so this says when it went to the president and became law. This is a copy of the bill down here. And when it's under an emergency act, so once the president signs, it will become law right away. So with that, what we want to go over is the Paycheck Protection Program and how to get the loan proceeds forgiven. Oh, Jeffrey says that it was approved by Trump today. I figured it would be today or early this week. So thank you very much, Jeffrey. So it sounds like it is a done deal. So with that, there's still 10 steps to go through for PPP forgiveness. And these are the things that we'll go over with a few case studies at the end. So the first thing that we're going to go over is documenting the company need. What I call this is the Ruth Chris Steakhouse rule. If you were watching what hit the news 2 to 4 weeks ago at this point, probably 4 weeks ago at this point, restaurants like Ruth Chris Steakhouse, the LA Lakers, and other large entities applied and got PPP loan funds of $10 million. So, and there was a public outcry about these public entities that and private entities that got $10 million of government funds when they had cash available from investors and elsewhere. So what happened with that is our request to our clients and anyone who got the PPP loan, we're suggesting that you put yourself back in the situation you were in on April 3rd, right after COVID was hitting, maybe your business was shut down, and what you were thinking, where your business was when you were filling out the application. You know, what was the uncertainty? Were you trying to make sure that you kept your employees employed? Were you just trying to survive? You know, what did your business look like at that time? And then document that in a memo or minutes, board minutes, to show the reasons that you received the application. The good news is that common sense prevailed a couple weeks later, and the SBA has now said that anyone who received a PPP loan of less than $2 million will have been deemed to make the certification that they needed the funds in good faith. So according to the SBA at this point, they're not going to harm anyone who received a PPP loan of less than $2 million. They're going to assume that you had a need for it to keep employees employed. Anyone over that $2 million is going to be looked at by the SBA, and they'll be looking at this. So next up, they, for 100% forgiveness, if that's the goal, for our tip number 2, you need a plan. You need to develop a budget of what you expect to spend the forgiveness dollars on. How are you planning to optimize the funds? And then monitor the plan and the changes that are coming out of the SBA. As I've said, even this morning, probably a few minutes ago, the PPP forgiveness program just changed again. Every time I've done this webinar, it's changed. So the monitoring of forgiveness is important. Now with this House Resolution 7010 being in place, you'll also need to be considering, are you going to use an 8-week forgiveness period or a 24-week forgiveness period, and what works best for your business? Tip number 3, you need to know the forgiveness period end date. So under the CARES Act, you had an 8-week forgiveness period. So if you received $10,000 in PPP loan funds, you had 8 weeks to spend those funds. Now with what Trump has signed today, you'll have up to 24 weeks to use those funds. So with that, you know, you have to know when that 8 weeks or that 24 weeks is over. For the 8-week period, that is limited to 56 days and starts on the date of the loan. And then for payroll purposes, you're allowed to elect an alternative payroll period, which we'll go over here in one of the upcoming slides. So with this, one of the questions I had in the webinar that I had yesterday was, if this 24-week period passes with what Trump signed, are you able to go anywhere in between, or do you have to choose 8 weeks or 24 weeks? According to the Forbes article that was out right after this House resolution passed the Senate, they said you'll not be required to use the 24-week period, but you can elect an 8-week period. So what that sounds like to me is that there's no in between. You're either going to choose an 8-week forgiveness period or a 24-week forgiveness period. But I believe the SBA will definitely clarify that probably next week with what that all looks like. So here's an example of the covered period. So with that, if you received your PPP loan funds on Monday, April 20th, Your 8-week coverage period would start on Monday, April 20th, and would end on Sunday, June 14th. So when we were originally calculating this, we were going from Monday to Monday, and the SBA was very clear that it ends the day before. So Monday, April 20th to Sunday, June 14th. With the 24-week period, your coverage period would go until October 4th. So it'd be, your start date would be April 20th, and you would go to October 4th, 2020. For payroll costs only, you're able to elect also a alternative coverage payroll period. And what that means is that since you received, if in this example, the company received their funds on Monday, April 20th. And with that, that was probably in the middle of a payroll period. Let's say a payroll period starts from Sunday to Saturday. So they'd already started their payroll period. So what this alternative coverage period allows you to do is move your start date for your payroll costs from Monday, April 20th to the beginning of the next payroll period, which is Sunday, April 26th. So with that, if you use that extra, if you start 6 days later, then you've extended your coverage period from June 14th to June 20th. So you've gotten yourself 6 extra days. This is going to be extremely important for instance, for employers that have laid employees off. Maybe they took the opportunity the week of the 20th, 21st, 22nd to call employees back, and maybe they started on the 27th. So this allows them to kind of take this week out of it and start new on the beginning of the coverage period. With the PPP loan funds, there's certain costs that you're allowed to use the funds for. Those costs include payroll costs and non-payroll costs. So with that, the payroll costs would include gross salary, wages, commissions, etc., cash tips, vacation leave, sick leave, separation payments. It also includes employer payments of group term health insurance premiums, retirement benefits, the employer retirement benefits, so 401k match and simple match payments. It also includes payments to state and local taxing agencies, for example, state unemployment. And it also includes for self-employed individuals and partners in partnerships and contractors, the sum of payments paid to sole proprietors and independent contractors. Even though we don't call that a payroll cost, for purposes of this calculation, they do. What is not included? So what's not included is compensation paid to an employee who does not reside in the United States. With that, we don't have a lot of that here in Southeastern Ohio, but it is one of the things that's not included, so I wanted to make sure and cover it. Cash compensation in excess of $100,000 annualized. So what that means is with an 8-week forgiveness period, that's limited to $15,385. Our assumption is when it extends to the 24-week period, if that's the one you use, then you'd be able to use up to $46,154. So with also the employer portion of employment taxes, so employer Social Security and Medicare match is included in, or is not included in payroll costs, as well as sick leave wages if you get a credit for COVID sick leave. So if you have an employee that's quarantined, there's a credit that you can get paid for 100% of employees' wages for the 2 weeks that they're off. So that is not included in the PPP forgiveness costs. Also, payments to independent contractors. So even if you call them a quote unquote employee, you have to run them through payroll for it to be a forgivable cost. If you have a contractor that you work with that you give a 1099 to at the end of the year, that is not included because they'd be eligible for their own PPP funds. So is payroll forgiven based on payroll period or end date? This is a question we've been asked a lot, so I've included a slide on it. The good thing of what the SBA has done is they've kind of allowed a great deal of flexibility here. So with that, you're allowed to pay back payroll that hasn't been paid, that wasn't paid out until the forgiveness period. So in our example where you had someone get the funds on April 20th, if they hadn't paid out payroll but then went ahead and paid it on April 21st, then that's included because it's included in the forgiveness period. You also are able to include payroll costs incurred during the period, but then paid after the forgiveness period on the next payroll date. So if you have a weekly payroll and the forgiveness period ends today, then if you pay payroll on Friday, that will still be included in the PPP forgiveness. So for payroll costs for owners, this down here is a screenshot of what the forgiveness application currently looks like. So compensation for owners is broken out in the application. So it is limited to the lesser of $15,385 for an 8-week period, or we're assuming $46,154 for the 24-week period, or the equivalent of what you would have, an owner would have got paid in 2019. So for example, we have an owner who got a W-2 in 2019 of $60,000. One of the questions we had was, can I give myself a raise? Originally, before this application came out, we'd said, sure, if that's deserved, you know, and you were going to do it anyway in the reasonable course of business, absolutely, you could give yourself a raise. Well, this caps the compensation based on what you made in 19. So for 8 weeks, you know, we would look at 60,000 divided by 52 times 8. And whatever that is, that would be the lesser of and what you'd be capped by. So in essence, what they've done is they've stopped people from essentially paying all the money to themselves and not giving it to the employees. So tip number 5 is there's also non-payroll costs that are allowed of up to now 40% of rent, mortgage interest, and utility payments. I think for most people who use the 24-week forgiveness period, this is now not as important because you could easily use 100% of your loan funds for payroll costs. You have plenty of time to do that. So if you decide to use the 8-week period because you've already planned on it and your coverage period's over or over in the next couple days, you can include in there rent, mortgage interest, and utility payments of up to 40% of the total proceeds you received. So if you received $100,000, up to $40,000 of those funds can be used for these things. The interesting thing they put in here is kind of what they did with payroll. So if you have an electric bill, for instance, if I received my funds on April 20th and my electric bill was paid on April 25th, that's included. Also though, if I receive an electric bill tomorrow that is included in that 8-week period, and I pay that 2 weeks before it's due in 2 weeks, then I'm able to include that as well. House Resolution 7010, one of the interesting things in the Forbes article, and we'll have to see how this plays out, appears to create a cliff that if a borrower fails to spend 50% of their loan proceeds on payroll costs, none of the loan is forgivable. So they've made it clear from the beginning that this is meant to be a payroll protection program loan. They're trying to keep people out of and off of unemployment. So this is obviously the biggest focus for this program. And what they're saying is that if you use 50% of your loan proceeds for payroll and 50% of your proceeds for non-payroll, there's a potential with this House resolution that came out that none of your loan would be forgiven. One of the interesting things that came up is documentation of the payroll costs. This is a blurb from the loan application. It's on, I believe, page 10 of the loan application if you look at that. Everything that you have to have for your non-payroll costs have had to have been in existence prior to February 15th. So pre-COVID, you had to be paying rent to your landlord. Pre-COVID, you had to have an electric utility set up. Pre-COVID, you had to have a mortgage. So essentially what they're asking for is they're asking for documentation to show that you have a lease in place, you have a mortgage in place, you had a utility in place, and then the documentation for how you paid that. So definitely things to get together and make sure that are up to date and ready for the lenders when you go to give that to them. So what is a utility? The non-payroll costs include utilities, which include electric, gas, water, the unknown transportation. I assume that should be defined next week. Telephone and internet. We've heard that transportation could possibly include fuel for business vehicles, but we don't know that. So at this point, we're not keeping track of those for our clients. Our understanding is the SBA has 30 frequently asked questions ready to put out. And I would hope and think that probably one of those things would include what is a utility, what's included in a utility. One good question on non-payroll that I'll mention. So this includes also expenses in arrears, you know, so let's say you didn't pay your March rent because you had just got closed down and you weren't able to. You can pay past due items such as rent, and that would be included in the forgiveness period. But if you wrote your check 2 days before you got your funds, then that's obviously before you received your PPP funds, and so that's not included. Know your FTEs. One of the tests in there is not just that you've spent your PPP loan funds, but it also looks, did you keep your head count the same? And did you pay your employees essentially what you paid them before? So with tip number 6, the idea would be, what are your FTEs? So an FTE, a full-time equivalent employee, is based on a 40-hour work week. So here in this example, there's 2 options. You can calculate it based on the 40 hours per week with not more than 1. So employee A worked overtime, 10 hours of overtime, so they don't get counted as 1.25 FTEs, they're 1 FTE. The employee that works 40 hours is 1 FTE. The employee that worked 20 hours is a half an FTE, so 20 divided by 40, 32 hours, 0.8, and then the 16 is 0.4. So if you were to do the actual FTE calculation, you would have 3.7 FTEs. There's also a simplified method out there that says if you have an employee that worked 40 hours or more, you can count them as 1. And if they worked 39 hours or less, you can count them as a half. So that's the kind of a side-by-side comparison that you would count these A and B employee as one, CD and an E employee as half. And so then you'd have us under the simplified method 3.5 FTEs. And the idea is that you need to keep those consistent throughout the PPP period, or if you were in one of those affected industries that laid people off, then you have to make it right by the end of the coverage period. So there is an exemption allowed under what Trump signed today with FTEs. And what it says is that if you have an inability to return to the same level of business activity as you were operating at before COVID hit, before February 15th, then because of requirements established under the COVID guidance, it's a lot more words than that, but the idea is the COVID guidance, then you're able to ignore the FTE count. So if you're a restaurant that had 20 full-time equivalent employees and your restaurant only is now at 50% capacity, so you're only hiring back 50% of your FTEs, so you're only at 10. What this is saying is that if you're unable to make it back to your revenue and expenses of the pre-COVID, then you're able to completely not have to calculate the FTEs. The way that I've seen the documentation discussed is that you'd be giving your sales in December of 2020, and if they're less than your sales from February of 2020, then you'd be able to utilize the exception. There's also an FTE reduction if you, for 4 different items. So if you have a full-time equivalent employee, let's say you had the 3.5 that we talked about before and you laid them all off, okay? So if you give everyone a written offer to rehire, and we'll go through those steps here in a second, and they refuse to come back, then you do not have to, you're not going to be hurt for that employee that refused to come back, as long as you fulfilled all the steps that we'll go over. The other things that you're able to decrease your full-time equivalent employee count was for if during the covered period, if you fired an employee for cause, they voluntarily resigned, or they voluntarily requested and received a reduction in their hours. So let's say they're a high risk, they're, a senior, or, they had a daughter who has a heart condition. We had that. If they requested a reduction in hours, then you're able to take them out of the FTE count. So let's say they were 1 full-time equivalent employee. Now you only have to be up to 2.5 instead of 3.5 in my example before. With the refusal to return from being laid off, the 5 things that the SBA has said that you have to look at are these things. So as long as you've done these 5 items, you're able to exclude them from your FTE. So you have to have in good faith made a written offer to rehire to the employee. So you laid someone off, instead of just calling them up and saying, hey, are you ready to come back? You had to give them, I think, a text, email, or letter is fine, saying, we want you to come back on such and such a date. The offer had to be for the same salary or wages and the same number of hours that were earned by that employee on the last payroll period. So if on their last payroll period, they worked 40 hours, you have to offer them back at 40 hours at the same hourly rate. If the employee rejects the offer, so we've had a lot of clients that their employees were essentially looking for other work while they were off. So they tell you they're not coming back. That does not have to be in writing. They can just verbally tell you that and you document it. You maintain records showing the offer and the rejection. And this was the thing they just added on. The borrower informed the state unemployment insurance office, so Job and Family Services, that the employer rejected the offer of reemployment within 30 days of the rejection. So what that means is if they rejected it because they just wanted to stay on unemployment because they're making more money, then you have to tell Job and Family Services that they rejected an offer of reemployment, which means then they'd not be eligible for unemployment anymore. So all 5 steps are required for the written offer to rehire to count. Number 8, you have to pay them at least 75% of their annualized first quarter wages. So what it says exactly, and I don't believe this test was changed with what Trump signed today, is that if you decrease your salaries and wages by more than 25% of any employee who made less than $100,000 in 19, then then part of your forgiveness will not be allowed. So if you have an employee that was working 40 hours a week for $10 an hour or $400 a week, and you took them down to 20 hours a week or $200, you've decreased their payroll by more than 25%. You decreased it by 50%. If you don't make that right by the end of the coverage period or December 31st, then there's a portion of that you're not going to be able to get forgiven in your PPP loan. You can keep them at that lower amount, but just know that part of your forgiveness is going to be decreased. We'll briefly go over this in one of the case studies here at the end. So tip number 9, all can be fixed by December 31st. And it was June 30th, 2020. This House Resolution 7010 will increase that to December 31st, essentially giving everyone 6 more months to make it all right. If you've restored your FTEs or your salary wage levels for changes that were made in between February 15th and April 26th, then you don't lose out for forgiveness on those things. This is related to PPP, so I include it in here. If you have applied and gotten an EIDL advance, a $10,000 EIDL or disaster loan advance, it was given out at $1,000 per employee. So some of our clients got less than 10, but 10,000 was the max. Although you're not required to pay it back to the SBA, what they have said in the forgiveness application is they'll reduce the amount of forgiveness under the loan. So let's say you got a $100,000 loan, you spend the $100,000 for what you're supposed to spend it on. If you received a $10,000 EIDL grant, then the amount of forgiveness will be reduced by $10,000 and $90,000 is what will be forgiven. Okay, so a few examples that we can go over. And I'll just clarify 2 questions I have here that are good questions. I think I have, but we'll just make sure. So if your 8 weeks is up today, it is now extended. Yes. What Trump signed today is retroactive. So if your 8 weeks is over, but you weren't going to spend all your money, you now have, if you choose, 24 weeks to spend all your funds. Also, if you didn't spend all your money in 8 weeks, does it automatically give you 24? Yes. What they've changed the law to say is that you have 24 weeks. I believe what the SBA is going to allow is that you can use an 8-week coverage period instead if you want, because that's what was in place. All right, so in this example, you have a self-employed person. On their Schedule C, line 31, they made $75,000. Just for this example, they have $1,000 a month of non-payroll costs for cell phone electric, rent, so on, okay? So with the CARES Act as it was, I guess this now is now outdated, under the 8 weeks, they would have received a loan for $15,625. So that's $75,000 divided by 12 times 2.5, $15,625, okay? Under the 8-week period, they'd have quote unquote payroll costs or self-employed earnings of $11,538. So that is $75,000 divided by 52 times 8, okay? So under what the SBA forgiveness application says, that you couldn't pay yourself more than what you made in 19, or $11,538. You have non-payroll costs over 8 weeks of about 2 months, or $2,000. So your forgiveness cost would be $13,538. So in this example, the old way, you would have got a PPP loan for $15,625. You would have had forgiveness amounts eligible of $13,538, and you would have had to pay back a PPP loan of $2,087. Okay, taking that one step further, if this self-employed person also got a $1,000 EIDL grant, then now they'd have to pay back a loan of $3,087. Okay, so with what Trump signed this morning, that is extended to 24 weeks, which essentially for all Schedule C individuals, especially if they have no employees, guarantees forgiveness, okay? So what that means is that you're eligible to use of your $75,000 up to $34,000 in payroll costs to yourself, which already exceeds the amount of the PPP loan, okay? So you can pay yourself $15,625 and completely get forgiveness right there. They'd also have non-payroll costs of $6,000. It's about 6 months. So total forgiveness cost of $40,000. It's the lesser of the loan amount or the forgiveness costs. So you'd have $15,625 forgiven, and you have nothing to pay back. Okay. So a few other examples here. Here is one with a self-employed person with an employee, okay? And this is also got the pages of what the forgiveness application looks like. So this is the first page of the application, kind of going through the rules and what definitions are and so on. Same with page 2. Page 3 is kind of where you get into the bones of the application. So you have to give the, name and so on, the name, the address, the loan number, the lender loan number, which you'll have to receive from the bank. I'm sure they'll give it out. The PPP loan amount. So in this example, real life example, this is $26,539 of PPP loan funds. Those funds were dispersed on May 8th, okay? At the time of their loan application, they had 2 employees, the self-employed person and one employee is the way they counted it in this example. And at the time of the forgiveness application, they had 3 employees, so they actually added a person. They didn't receive the EIDL funds, so we're not putting anything here. And we're showing that they paid payroll twice a month. So their covered period is 5/8 when they receive their funds. Using the 8 weeks ends on 7/2, okay? With the 24 weeks, that is extended to 10/22 of 20. So obviously 16 more weeks of time to spend the funds, okay? So they received their PPP loan was $26,539. So if you go, we're going to skip to the pages of the form that you have to go to. So you'll see on this first line, line 1, it says use your payroll costs from PPP Schedule A, line 10, which is not on page 4 like you would expect because there's more information there. Not on page 5 because that's more instructions, or It's on page 6. So on page 6, you put in here information from a table, which is page 9. So in this example, they had employee 1. You have to include an employee identifier. What I've seen that they're clarifying is now the last 4 digits of the social is what most people are going to be using. What they were paid during the covered period, $84.80. Their average FTE, so they had 1 employee was paid $84.80, 1 FTE. They hired a second employee, paid him $8,000, 1 FTE. So they have 2 full-time equivalent employees. So that number, this green box here is if you qualify for one of the exceptions we talked about, you can put a 1 in here, which then should reduce your number. So that 2 would go down to a 1. There's also space for here, down here for an employee that made more than $100,000. So what you'll notice is there's no salary wage reduction column here. That's gone because you don't have to compare salary wage reduction. So that comes forward here to page 6. They paid out $16,480. They have 2 FTEs. They didn't pay anyone over $100,000, and they paid everyone what they were supposed to make. They didn't have any health insurance or retirement match. All they paid out was unemployment tax. This self-employed person paid themselves $10,303.69, which is limited to what they made last year. This is based off of 8 weeks, keep in mind. So they had complete payroll costs adding together 1, 4, 6, 7, 8, and 9 of $27,012.65. So if you go back here, you got $27,012.65. Here's where you'd put your mortgage interest payments, your rent, and your utilities. So they didn't need that because they used 100% of their funds for payroll. So we just didn't include those things in there, so we didn't have to give the bank documentation for that. So they used $27,012.65, which is the amount of allowed for forgiveness, but their loan was $26,539. This is the test to make sure they used all of their funds or the majority of their funds for payroll, and it's the lesser of these 3 numbers. So they got a loan for $26,539, and they got forgiveness for $26,539. They didn't receive an EIDL grant, so they have nothing to pay back to the Small Business Administration. Okay. And I know I went through that fast, but I'm just trying to keep this as simple as possible because it's very easy to get down rabbit holes very quickly. You know, for instance, if you go through what the salary wage reduction calculation is and so on, that gets really complicated very fast. Okay. In the interest of time, to try to get you guys done by 1, I'll go through the questions that I've got, and then we can wrap up. Just to end, tip number 10, you know, if in doubt, make sure to ask for help. With what's been signed today, a lot more flexibility is available for people who receive the PPP loan funds because you have much more time to spend it. I think there's some pitfalls with this 24 weeks as well, you know, because do you have to keep your full-time equivalents for the whole 24 weeks, et cetera. But definitely look at the plan that you've got. If you need help, feel free to reach out and ask for help. Here's my contact information, or, you know, another CPA or investment or bank person that is a good friend and ally of yours would be able to probably help you as well. Also, you can use this email address if you're interested in getting a copy of the slides. Send me an email to mmdurst@mhrcpa.com, and I'm happy to send a copy of the slides to you to use. Okay, and I'll put that here in the chat. Real quick. All right, let's go through questions. Okay, so for the questions, if we received a $100,000 loan and the $10,000 EIDL grant, only $90,000 will be forgiven if you use all 100,000 of the PPP loan funds for the correct things. Yes, that's how that works. Can owners take more money than they were making before COVID-19? The answer is no. With what they've put in the forgiveness application, you are not able to make more than you made in 2019. So if you made $60,000 in 2019, then you have to divide that by 52 and times that by the number of weeks in your forgiveness period, and that's the max you're allowed to make. If still on the EIDL grant, if you only use $90,000 of the $100,000 PPP loan fund, only $90,000 would be forgiven. And then if you receive the EIDL grant of $10,000, then that would also reduce that. So then it would be 80. That is correct. Tony is telling us that the loan lender number should be the PPP promissory note that on the promissory note that was signed. So everybody had to sign when they got a PPP loan a number of pages to get the funds, and that lender loan number is on that promissory note. Thank you, Tony. I did not know that myself. So for a partnership, so for Schedule Cs, I was saying you had to use line 31 of your Schedule C. For a partnership, you would receive a K1 document instead of using a Schedule C. So for those that are in partnerships, you'd use your K1 document. I believe it's line 1, or there's a self-employed income number at the bottom of the K1 document. Yes, that's what you use. So partners are eligible to participate in this program as well, and they would use their K1. That's correct. For payroll costs, does that include payroll taxes, unemployment, workers' comp, etc.? So payroll costs includes gross payroll for everything that was paid out. Unemployment, we do not think workers' comp is included. We thought it was before, but they are specific in saying taxes, employer payroll taxes. Workers' comp's technically not a tax. So we do not think workers' comp will be included. So if you originally had an 8-week plan, do you need to fill out the application for the 8 weeks or send something to the bank saying you're going to 24 weeks? Here, I'll just show you. What this says, I don't know that it says it here. So this is an emergency act. It's actually retroactive in the CARES Act. So what that means is that automatically, as of this being signed, your 8-week period is no longer, and it's actually 24 weeks. We think the SBA is going to allow you to choose 8 because all of our clients are so close to their end of their 8-week period. So you don't have to contact your banker. I'm sure they'll get inundated with calls, but it is 24 weeks and you don't have to worry about that if you want to extend to the 24 weeks. So the last question I see here, in case anyone wants to provide anything else, is just, we provide an essential service. My understanding is that hazard pay, a bonus, is an eligible payroll cost. Absolutely. Hazard pay, if ran through payroll, is an eligible business cost. However, if you're paying it to yourself as an owner, I think you would be limited to your 2019 payroll. All right. With that being said, I think we've got through everything. Just for those of you who've been on some of my other webinars, this is the fastest I ever got through those things. So I'm proud of myself. I'll pat myself on the back here. So what I want to make sure of is here are upcoming webinars we have coming up. The June 17th one will focus on forgiveness, but we'll also talk about what's new. Obviously with today, everything changed, so we'll clarify what the SBA said about that. And then we're also going to have another webinar on July 8th. So feel free to reserve a spot for those if you'd like to. Or if not, let me know if you want the slides. But thanks very much for tuning in today. I appreciate all of your time logging in. Thanks so much. Frank, is there anything?
I just want to say thank you to you.
Okay.
No, it was great. I mean, I appreciate you taking the time, and obviously people are on because they want to hear it. So thank you.
Thanks. Thank you very much. It's been good to learn, to go through this, but also we like helping our clients and helping people out there maximize their forgiveness and the amount of funds that they could get. So yeah, this has been a labor of love for sure. So
all right, have a great weekend.
Thank you guys. And if you have any questions, feel free to reach out to me by email, this Durst. I appreciate it very much. Thank you.
Bye.
Bye.